Hello everyone, welcome to my channel. My name is Benjamin, and for those of you who know me, I'm the Buffett investor. And so in today's episode, we're going to talk about, dividends income investing, because I heard about it, a lot of times people ask me, hey Ben, how can I actually invest into my investment portfolio and continue to actually receive, dividends, paying every, month or even quarter, right? And so I thought that, in this episode, we want to actually discuss, how can we actually do dividends investing, especially using in the context of Singapore. I think the Singapore market is really very poised, I think, in terms to really aid and a lot of investors how they can actually do in dividend investing. Right. So broadly speaking, there's always two ways for Singapore context. Generally speaking, you also can go into strong dividend companies that pay out consistent dividends. So you always want to look at companies with very mature, a large market capital, right? As well as in terms of they're able to pay out consistent growth in terms of their dividends payout, things like that, right? So I think you can look at some of these companies. On the other hand, we also have what we know as REITs. So for some of you, if you have heard about the real estate investment trust, REITs. In the case of Singapore, because of our regulation, it's actually required for all these REITs to actually pay out 90% of their, I would say, income, right, back to the shareholders. So they have to actually give this all payout as dividends. So if I think for the environment, the investment environment in Singapore, it's really very poised. You can actually buy into long-term dividends companies as well as investing to REITs, and this can overall grow your, I would say, your in terms of your entire wealth or investment portfolio to generate income, passive income. And why for the case of Singapore a bit more sweetener to, in terms of why it's good for dividends is that in terms of the regulation as well, there's no tax on your capital gains, there's also no tax in terms of your dividends as well. So unlike in the US where there's some withholding tax on the dividends, in Singapore there is zero tax on dividends, right? And as I also shared earlier on, in terms of REITs, they are also required to pay out 90% of the income back to the shareholders, right? So this is generally speaking how we actually look at if you want to actually adopt a very dividends investing income approach, right? And also in the case of Singapore, you can go via these two ways. And next, I also want to draw a parallel. How is this also similar, and given what is Warren Buffett's take in terms of dividends investing? Is that just for everyone to share, to know also, is that in fact for the top, I think if you look at all his top holdings in terms of in Berkshire Hathaway, right? How Warren Buffett, he invests in all these strong companies. For the year 2019, if you read from his shareholder letters, it was actually stated he expected that Berkshire would actually stand to gain almost close to $4 billion in terms of dividends. So can you imagine that he's the man that he walks the talk, right? He's also preaching what he's doing. Even although Warren Buffett goes after buying companies at an undervalued or fair price, but at the same time he's also doing two ways. So you buy good companies that can appreciate over time, and also concurrently over the long period they are paying out consistent dividends, and this is very important because why? It also helps to grow and strengthen our portfolio over time. We not only as it starts to snowball, right, the effect is that these companies will continue to pay more and more dividends, and it can actually add on to our cash flow, and we can use this cash flow to reinvest back into our investment portfolio. So can you imagine how powerful is this concept, right? And I thought that since we're also talking on this, it's also good that perhaps I also just want to talk a little bit about just what are some of the ways, I'll say factors and things to consider, especially when we are, looking at dividends, stocks, or even REITs, right? Some things to look at, right? No worry, I mean, all of these concepts, I'll also put it down in the comment section below, so that it's easy for all of you to follow, right? I think firstly, when we look at some of these companies, again, I was talking about, try to go for very strong market cap. Yeah, I know sometimes it's very, it can be very enticing sometimes when we hear, based on hearsays or people say there's some IPOs and all this, but my personal recommendation, also following Warren Buffett's tip, is try to go for companies that have proven track record, right? They have been listed for a long time. They are also, more than 10 years, and they also have a very large market capitalization. I think the case of Singapore, I would say that even the largest like Singtel and all this, they are almost like, 60, I think, or $60 billion capitalization, right? So just look at some of these companies. Whereas for REITs, REITs, I think it can come much lower down the line, right? It could be in the millions of that. But nonetheless, I will discuss REITs, in a separate video. But broadly speaking, these are just some of the factors you can consider, right? Listed for a long time. Make sure there's also a reasonable market cap. At the same time, do check out especially their dividend payout ratio. I think it's very important. Make sure there's at least 50% or more. But at the same time, do take note that it's always, you can always refer to like Morningstar.com websites or even like Yahoo Finance websites. Check out what is or even on the particular company or the REITs investors website. Just see what's the history of their dividends payout ratio. If it's approaching 100%, then I think you have to be very careful, because why? Make sure that you always compare in terms of what is the dividend payout, right? It could be in the terms of the ratio or the actual dollars versus what is the free cash flow, because you want to make sure that the company is able to pay out the dividends consistently and sustainably. I give you the case of StarHub, when they were actually paying up to close to 100% dividend payout ratio. It means that for every dollar they earn, they are paying out that ratio, and it means that the company is actually going dry, right? They are not able to sustain these dividends, right? So I think that's very important, right? I know there's lots of more factors which I'll discuss in later videos, but I hope that with this, you have found this useful, and do click and also share my video, click the like button as well as the subscription button to get more updates, as well as the bell notification button. And also do check out the links below. I'm actually going to start off this master class sharing, which some of you have also asked about it. I would just like to, it's just an informal gathering that we can all share knowledge on some live examples of how we can invest like Warren Buffett. I also hope to hear from you guys as well, your learning experience. So do check us out, and I'll see you soon.